All right. Good evening, everybody. Welcome to the Sunday night strategy session for July 19th, 2015. Let's go over the economic reports because it's a quick one this week. Monday at 2:30, Secretary Lou speaks. On Wednesday, we have existing home sales and crude inventories. On Thursday, we have the weekly unemployment claims. And then on Friday, we have flash manufacturing, new home sales, and French and German flash manufacturing, but that's way early in the morning, 3 a.m. and 3:30. So it's a pretty light week for economic reports. Now that is offset by a very heavy week for earnings. So there are a whole bunch of earnings scheduled to drop this week. Last week, I guess, officially started earnings season, but for us, it's this week. We have IBM tomorrow. We have Yahoo on Tuesday, which always officially started earnings season for me at least. So we're going to start getting in the thick of earnings now. Now, unless Paul disagrees, I feel that there's not really many stocks left that are going to be able to move the market, if any. Of course, we did see the NASDAQ break out last week. First off, let's take a quick look at what the S&P is doing, up a little bit. We saw the NASDAQ break out to 15-year highs, and looks like we're headed to all-time highs. We are only 6.08% away. Thank you, Peter, from the mastermind session for figuring that out for me. And Google helped, and Amazon helped, and even Apple helped, even though it's not screaming up here. It's still on the nice bounce. But as far as having a big influence, and this is going to spook the market, this is going to kill the market, not going to be anything that's really going to rock and roll us, in my opinion. Yeah, Apple does report, but again, maybe they'll have some influence. But I mean, I think, if I'm not mistaken, they're going to start reporting on the watches. I don't know. Yeah, it's the watches now, right? So that could be a little bit of a letdown. But I mean, really, are they really going to kill this market because Apple watches didn't sell as well as they did? And they'll always spin it that at least the iPads and the iPhones are still selling well. I don't know. Look, here's what I'm seeing in the market, and Paul's going to take over real quick, and he's going to continue with it. Basically, the NASDAQ is leading now. The small caps and mid caps are lagging now. Okay. Not really much of a problem, just means it looks like the focus is being narrowed. What's strange is, despite the NASDAQ screaming, the semiconductors are acting pretty crappily. They're showing poor relative strength, and they are in a coil right now. So if they do release from here, we can get them up and over that 200-day moving average. That may even add more fuel to the NASDAQ fire and keep it going higher here. But for me, the S&P now, my line in the sand was taken out. So now I do not expect these highs, to stick on the year. I now expect us to get through them. Oh well, I was wrong about that line in the sand. That's why I like having the deadline, the make or break lines put in, so you know where you're wrong as quickly as possible. So now we're looking to see if we're going to get to that new highs, despite the semiconductors lagging. Technology is moving higher. Biotechnology is doing well, and even software looks good. So Paul will go over them more, but for now, short term, we're looking for new highs. After that, hey, we'll see. So the Eternals are not really screaming, leading, telling us, hey, we're set to go much higher here. So we have to keep that in mind. Okay. Any questions you have, you can always write me at tiny@winningedgetrader.com or paul@winningedgetrader.com. With that, I will give it over to him, and I will talk to everybody again soon.
Okay. Good Sunday evening, everybody. Hope everybody had a very good weekend, good week. You watched the British Open, which I sat around waiting all day yesterday, and it never it never really happened. So tomorrow, instead of getting a lot of work done, I will sit in the office and watch the final round, which should be, if you're a golf fan, it should be one of the all-time great finishes, considering that almost everybody is within a couple of shots of the lead. So that ought to be fun. Let's see. Let's change course a little bit. So I'm going to pull up some stock, which I normally do not do. And I just want to ask you guys to type in your little box, is this bullish, bearish, or neutral? So here is Google. Is Google bullish, bearish, or neutral? Tom, I don't follow, Tom. What do you mean you can't see it? You don't see the right-hand side of the chart? You see my title page. Peter has no audio. Peter, I don't. Well, you can't hear me anyway, so Tiny, maybe you can answer the question on the title page for Tom. I have absolutely no idea what that means. Okay. Okay. So Google, clearly this is a huge bullish breakout for sure. Let's continue. What is Amazon? Bullish, bearish, or neutral? Okay. And what about Netflix? What's Netflix? Bullish, bearish, or neutral? Yep. So we just pulled up 3 stocks that have all broken out in a huge way to the upside. And they're 3 of the more heavily weighted stocks in the NASDAQ 100. So what do y'all think? What are the cues? Are the cues bullish, bearish, or neutral? And I know before you ask, Johanna, here I love, you got a beautiful flat top breakout in the cues. So what are the cues? Bullish, bearish, neutral. So, all right, so you guys get the picture. You've got the cues are breaking out because of the wild action in essentially in 3 of their biggest stocks. Because the rest of them, they're okay. Apple's the biggest by far. I mean, it got off its tush, but Apple is not bullish yet. But Apple would be neutral so far. We've got a big consolidation, and you go to like Microsoft and Cisco. Microsoft looks okay. Cisco looks okay, and Intel is not so very good, as my 7-year-old would say. But so the NASDAQ 100 really is being led. Oh, and Facebook. Oh my God, I forgot Facebook. Facebook monster week. So you got 4 of the glamour stocks have all blown out to the upside. So let's work back from that. The NASDAQ 100 looks strong. Could it be a climactic move? Could this be the final, the coup de grace, the pièce de résistance, whatever we're going to call it here, the final gasp? Sure, it could. Too early to tell. Now, what you want to see is what are the other indices doing? So the Dow, best thing you could say about the Dow is it is kind of neutral, right? In the same trading range it's been in since last year. I've talked about it ad nauseum on this call as well as on the blog and our newsletter. Dow's neutral. Let's look at the S&P 500, which is pretty much neutral, maybe a drop stronger, a little stronger than the Dow. I've said all along that I thought we have all-time highs coming in these indices. So now here's the S&P is but 1 day away from an all-time high. And let's look at the mid-caps. Mid-caps, not so much. This is not a really strongly bullish pattern here. So we have the Dow and the S&P, not bad. Mids and smalls, or the SMIDs, not so great. And the Qs in orbit. You market historians, what does this sound like in history? Anybody remember? What does the current market sound like price-wise? Johanna, you could call this a flat top, although for me, it's a little too sloppy to be a real, it's a little too sloppy, and the range is a little too wide to be a true flat top if it breaks out. But if it breaks out, if Apple breaks out, it's going to go. You're going to get a lot of momentum behind it, but I wouldn't, it's not as strong as some of the other ones we've seen. So Hanson and John, yeah, I mean, the price action, JN says it, Nifty 50 of the 1972-73 market. But to me, just the price action is kind of a mini version of what we saw in 1999 leading up to the top in 2000. So before you log off and say, wow, Paul's really bearish because the market went down 50% from there, keep in mind that at the peak in 2000, you had market sentiment was never more bullish than it in 2000. Valuations were off the charts, and most importantly, the monetary backdrop of the market was pretty bearish. So today, the price action is similar to 99. Sentiment is certainly not like 99. Monetary, certainly not like 99. Valuations, while they're not cheap, they're not like 2000. But I just wanted to point that out because I'm sure we'll be hearing a lot about that this week. There are a few similarities, but I don't think we're on the precipice of a 50% market decline. Okay, now so we did the major indices. We clearly have a problem. It's not bullish, by the way, and I haven't heard anybody spin it this way yet. Maybe it'll happen this week, that the NASDAQ, the Qs are going to lead everything else higher, drag everything up. Is it possible? Of course. Is it probable? No. Let me do two more things, and then we'll go to the AD lines. Here's Europe. Europe looks very, very sloppy. It's completely news-driven based on the total nonsense in Greece, which as you know, I've dismissed countless times in my blog. So here's Europe. Is it bullish, bearish? To me, it's neutral. I own a little bit for full disclosure, but the price action just looks neutral. And the emerging markets, which got hit with the ugly stick, are bouncing back, but clearly this cannot be construed as a bullish chart in emerging markets. It looks like you got to sell any rally, maybe up into the 40 area, you sell. My holdings, China, I still own. I sold some here, and I will be selling some more into some strength. Hong Kong, I haven't sold yet, but I'm getting close to getting out of some of the Hong Kong. And that's really it. Those of you guys, I'll pull up Russia because people always ask, and there's nothing going on. Nothing. Zero, zilch, nada. All right. So before I go on to AD lines, any questions? Okay. None. Let's forge ahead. I'll come back. So here is the NYSE AD line. Is it giving us any clues? Well, I'll ask you guys. Is this giving us any clues? Here's the NYSE AD line. Any clues? Any clues? Yeah, don't look at it in technical terms like lower highs, lower lows, or downtrend. Kind of think about it in the big picture. All right, so here's what I'm trying to get at. You have the market, the Dow and the S&P are kind of up here, closer to all-time highs, and the AD line is nowhere near all-time highs yet again. So you had a divergence here, and now this rally in the market is not accompanied by the majority of stocks. Now, maybe your rationale is that the interest rate stuff on the NYSE is making it look weaker. So now we go to the NYSE common stocks only AD line, and that does not look any better. NYSE common stocks only looks kind of crummy. So we know that market breadth. We're losing some horsepower. Let's go to the NASDAQ. Here's the NASDAQ AD line, and that looks equally as crummy. But now you may say, the NDX is really the leader. Let's check out the NDX. Well, it's at a fresh yearly high. The all-time high is still in 2000. So we have another divergence here. Price is up here, but the indicator's down here. So clearly you have some internal weakness in the market. And it's gotten worse over the last couple of weeks. Let's forge ahead. My other laptop just crapped out. That's great. Okay. So let's forge ahead. So the indices, we know the Qs look dynamite. For full disclosure, I still own my Qs. I haven't sold any yet. And I own some S&P 500. Those are the only indices I own in the U.S. I am seriously contemplating lightening up across the board. Let's go to sectors now. Our three key sectors. Here are the banks. Banks, as you know, I've loved them for several months, and I think they're a second half of the year play, blah, blah, blah. This is still a bullish picture. Even if they pull back 10%, I think it's still bullish. They're definitely on my list to buy when I need a long. So they still look pretty good. The semis, on the other hand, look like death. As you all know, no secrets, I hate tall red candles because most of the time they don't serve as the low. So I would say on the surface that this is not the low, that we got more downside coming in the semis. But this does not look like a healthy chart. And the trannies, I hate this candle. Could it be the low? Yes. Is it? I don't know. But I'm not holding my hopes out yet. They've been going down and correcting for 7 months, and to me, there's still no great bottoming signs that this was it. Now the weekly chart looks a little better. Weekly chart oversold based on stochastics, and you got a little hammer down here. Looks a little better than the daily, but I'm not going to hang my hat on that one just yet. So the three key sectors, one looks okay and two stink. Not so healthy, in my opinion. Now let's go on to the rest of the sectors. So software. Software still looks pretty good. Still looks good. Can't argue with that. Telecom, on the other hand, looks like death. And I would doubt this was the low, and we'll probably, whether we rally a little further or roll over right now, I think we're going down here in telecom. So that's not so good. Diversified financials look pretty good, similar to the banks. So we've got leadership is coming from the financials, and that's long-term positive, although the problem is that the semis stink it up. So it's kind of pairing off that is this strong message. Consumer, which we all know everybody's left for dead at every possible juncture over the last 7 years. All-time highs in XLY. I've talked about it for months and months and months and months and years that people love to talk about the demise of the consumer. Just follow this chart and you won't get screwed up on it. Recessions don't start with this chart looking like this. I'm sorry. I forgot who I just read who hypothesized that we're in recession right now, or we could be. I was it may have been John Malden, who I think is borderline quack anyway. The heck was it? I don't remember who it was, but XLY, recessions don't begin with the consumer stocks at all-time highs. And here's the retailers, not as strong, but this is a nice coil. This is not a topping pattern. And the home builders, which you know I've liked for a while, they're going to pull back right now, but I'd buy any weakness in any kind of 10% pullback in the home builders. I would be a buyer of. Energy, which has been death lately. Here's the XLE. Looks like we're going to test the low 15 lows right now. OIH is right there as well. We'll see what happens. I still own some OIH, so not thrilled, clearly, but we'll see what happens. Give it a little room. I have a small position. I can give it a lot of room. Industrials and materials both do not look good. Industrials we talked about for a while. I haven't liked them in a while. I don't like them now, but better money made elsewhere. I think they probably go lower. Materials, same thing. No reason to rush out and look at this sector either. So as we go through these, there aren't a lot of sectors that you want to run out and buy. XLV, healthcare, which I've owned for several years, and I still own it, and it looks fantastic. But if we have a more significant market pullback, this is going down too. Make no mistake about it. A lot of people are hiding here. A lot of money's rotated into XLV and IBB. Both are at all-time highs. Both look phenomenal. Both are very susceptible right now to a sharp short-term pullback. So would I run out and buy these today? Absolutely not. If anything, I'm contemplating taking some chips off the table. So I'm glad I got these two to balance off some stinkiness in the OIH, but here I've got a much bigger position than the OIH. Yeah. So those are the two big leaders. So you got the consumer discretionary stocks, healthcare, biotech, and the financials, the market leaders now. Defensive stocks, XLP had a nice week, but they're still within this 7-month trading range. The REITs, and I own some of these in my macro portfolio. Hard to say these look great. Friday's action was really crummy. I mean, they're just bouncing out of an oversold condition. Could they go higher? Yeah. Do I have a lot of hope for them? No, I don't. And finally, XLU, which I still own from way back, had a beautiful breakout of this pennant on Thursday. Friday was a little inside day, and I would expect XLU to continue higher. So those are the major sectors. Here's the GDX, the gold and silver mining stock, which I mentioned. It looked just awful. I bought some here, gave it a shot, took my lumps 2 days later, just got out because it clearly was premature and wrong, and they've taken it on the chin. I've talked about gold going to sub 1100 for months and months and months, and silver sub 14. I still believe, here's gold, I still think gold's going sub 1100, and silver is going sub 1400. Nothing has changed there. Maybe it goes even lower. And copper, while we're on it, copper looks different. I like this attempt at a bottom right here. I like how we're trying to consolidate and coil here. The question is, are we going to reassert the uptrend right now? And if not, then we probably go down and test these lows yet again. A couple other ETFs that I bring up. The internet one went into absolute orbit this week because of Google and Amazon and Netflix. So here's the internet ETF, looks awesome and fantastic, just like the Qs. And the social media ETF bounced, it's sloppy, hard to love it here. You're better off playing the strong. So those of you like the solar stocks, I don't think this is the low, and I think whatever bounce we get just rolls over one more time to the downside in the solar stocks. So let me look and see. I think Canada just had 2 negative quarters of growth, so they're in recession now. Would that affect us? No, I don't think. I mean, Canada's economy is like would be a medium-sized U.S. state. No, I don't think that Canada will have an effect, any kind of serious impact on us. Johanna asked about the insurance group. KIE, yep. Here's the insurance group, similar to the other financials. Looks good. You got a lot of M&A here with Anthem and Cigna and Aetna and somebody else that I'm blanking on. So there's more risk and more volatility in the insurance group. But it looks good long term. Any commodity inflation coming? The Fed certainly hopes so, but the commodity index, the GSG or the DBC, this is how commodities put in a low. They scrape along like a hockey stick for a long time. So this is a low forming in commodities. It could end tomorrow. It could go on for another year. I don't have any opinion on when commodities bottom, but I don't think it's right this second. And I've been a deflationist, since 2007 anyway. So if you're looking for someone to talk about inflation, I'm not the one, because I completely dismiss it as zero. Not happening, not going to happen anytime soon. Okay. Let's see. You missed my S&P IWN. I don't want to normally answer any questions, but I really think it's worthwhile when Tiny sends out the recording of this, because we did it a little differently tonight. So please spend the first 10 minutes and listen to the recording, please. It was a good one, I thought, on the overall market. Jay asked about JNK and the high yielders. Let's go to them right now. So here's JNK. I got close to buying JNK last week, and then couldn't get enough momentum. Friday hit, and they still look. JNK still does not look good. Oops, what the heck did I just do? There we go. Still. I'm guessing, because I forgot to ask my buddy, that a lot of this decline may be from the oil patch, from the oil service companies. But I'm just speculating right now without asking an expert. Here's the PIMCO fund. Looks a drop better than the JNK. That shows a little bit of momentum going to the upside here. Let's see. Gold just fell apart. So now we're sub 1100. Okay. I'll get to natural gas in 1 second. Do you still think the Fed is keeping rates low for a few years yet? Yes. I think when the Fed raises rates, I don't think it's going to be in September. But I think when they raise rates, the first raise will go in a series to, I don't know, somewhere between 1.25 and 1.5. But I don't think rates are going to go up significantly till we get to the other side of the next recession. Let's go to natty gas. And as I said about commodities, this is a commodity in the process of bottoming. It's going to be a beautiful bottom when it happens, and it's going to go up dramatically when it happens, but we're not there yet. So have patience with natural gas. The bottom is coming, just not right now. Here's crude. A drop stronger than the OIH, but not really. It looks like it wants to go a little bit lower, maybe towards 45. Gold we covered, silver we covered, copper we covered, natty gas we covered, bonds. Here's the TLT, which has gone nowhere lately. It's been in a pretty good trading range, and I have no opinion on TLT right now. Zero, which is the first time in a long time. But it could go either way right now. The dollar has been rallying, which is interesting because when the dollar was previously rallying, everybody said the reason that the Dow and the S&P were performing poorly was because the dollar was rallying and the small cap and mid caps, which had much less dollar exposure, were the beneficiaries. Now you've got the Dow and the S&P close to all-time highs, the dollar's rallying, and the SMIDs are stinking it up. So it's kind of the exact opposite of what we saw during this rally. In other words, as usual, the media and pundits have absolutely not a clue what they're talking about. I ultimately think the dollar is going dramatically higher, way above this peak, which means that FXE, the euro, is likely going much, much, much lower over the long term. I said, parity, which is 100, on its way to probably 80 or 75 against the dollar, and the yen, which I said last week was shortable into this rally. I still think the yen falls sharply lower over a period of years. So nothing's going to change my long-term thesis. John asked, won't higher rates hurt home builders? So higher rates certainly affect the housing market, John. The answer, so I agree with you on that. However, on the home builder specific side, there are two pretty good tailwinds to the home builders. One is that input costs, lumber and materials, have come down dramatically, and raw land has come down dramatically. And two, you've got some M&A, mergers and acquisitions going on in the home builders, which would give them, so you got two tailwinds and one headwind. And I don't think mortgage rates have gone up that dramatically enough to really impact the home builders. Kevin, I did a different analysis of the market when I first started. So Tiny will send the link out. Spend 10 minutes just listening to the first part of the link to get the group's opinions on the market this week. How important is it that barely a third of the NDX is positive on Friday? Well, Alan, I think it is important because remember we talked about the AD line on the NDX, and it should have been it's not making an all-time high where it should have. So I do think it's important. I think the market is, where are we overnight? We're nothing. Market can't even move. But I don't think this is a bullish backdrop. I mean, the Dow on Friday, the S&P was essentially unchanged. The Dow was unchanged. And look at the AD numbers on Friday. That's 2-to-1 to the negative. Look at the up-down volume. Almost 3-to-1 negative. So the NDX was up 1.5%, yet the AD line on the whole NASDAQ was negative. So yeah, I think we've got the potential here for some kind of short-term peak. Okay, let's forge ahead. So we did the currencies, we did bonds, we did the dollar. Did I miss anything besides the grains and the ags? I don't think so. So here's wheat, which was constructively pulling back. So where I wouldn't chase wheat up here, to me, you pull back to the old highs right here, Johanna, the old flat top breakout, and you pull back to 53, 54, wheat deserves a shot on the long side once again. Corn, kind of sort of the same thing. It's pulling back. It had a nice move. Now it's pulling back. And they give corn a little more downside and give it a shot again to the upside. Beans, a little different. It's a more complex pullback, but also right back into this fat zone here around 99 and probably warrants a shot to the upside again into a little bit more weakness. So the three grains all look constructive so far in their pullbacks. The big soft commodities, not so much. Here is sugar, which is putting in one of the beginnings of a very long-term bottom. It's going to frustrate. So would I go near sugar right now? Nope. And cotton looks interesting. We had a nice run. Now it's pulled back significantly. This could be some nice bottoming action in cotton. So here's one to put on your list. Cocoa has been very different than the rest. Cocoa's been dynamite. We talked about cocoa all along. It's been dynamite. It's consolidating this impulse here. We're consolidating nicely. A little bit more pullback, and you could take a shot to the long side in cocoa. And finally, coffee is just like natural gas. It just keeps going sideways. Eventually, coffee's going to bottom, and this thing is going to take off in a really quick move, which is very negative for Starbucks, which has gone nuts. Starbucks has taken off to the moon while coffee has collapsed. Makes sense because coffee is a huge input cost for Starbucks. Did I miss anything? How about, let's see, CAD, DBA. Bill, I don't know why gold dropped. I don't have anything. The laptop I normally use, the other laptop I'm using is just frozen right now. So I haven't looked at any news. I don't know if it's a futures roll. I can't comment. Maybe Tiny has seen something. Let me look at the FXC, which is Canada. I'm sorry, it's a Canadian dollar, which is depressed as it's been, and smart money is long, but there's no signs yet that the Canadian dollar has bottomed, which trades similar to oil, and oil is a huge input into the Canadian economy. And the other one somebody asked about was DBA, the ags. I mean, it looks okay. I would rather be long than short over the intermediate term. The short term in here probably is a 50-50 proposition for DBA. You can't be bullish on coffee yet. Ultimately, I think coffee is going to resolve itself to the upside. But you can't get bullish because there's no catalyst or evidence yet that coffee's going. Could it fall out of bed? Yeah. I mean, this is not bullish action, it's bottoming action. He's got to be patient and wait. Somebody mentioned Starbucks raising prices. Let's see. Starbucks raised their prices. Do you think they know something about coffee? No, Michael, I don't. I think they're raising prices. My guess is because the economy is a little better and they believe their customers can support a price increase. I don't think they're raising them proactively because coffee will eventually go up. I don't know a lot about Starbucks' internal operations. I have to believe that with coffee this depressed, they're hedging their exposure. So they're buying tons of coffee down here in the $12 to $14 range to hedge a possible spike in coffee down the road. And here's coffee. So good companies use the weakness to lock in lower prices. Yeah, May, I don't think they're raising their prices because they're raising wages. I don't think wages are a big enough input cost compared to coffee, the price of coffee. But I don't follow Starbucks that closely. I don't drink coffee myself, so unless I go concerns, I will say of note for the week in the S&P. So at the lows down here, where I kept saying, the put call ratios are bullish for the market, sentiment was bullish, the surveys were bullish. A lot of smart money got really long down here. In only 2 weeks' time, we've lost almost every tailwind to stocks. And smart money, in the fastest flip-flop I can ever remember, they went from being net long here to net short over a matter of 2 weeks. That was unheard of. That normally takes months to happen. So we get some schizophrenic behavior with the smart money folks. Let's see. Dean asked, do you think when we start exporting natural gas, will be the cat? No, I think natural gas goes up a whole lot sooner than when we wait to start exporting it. I think the market will anticipate any deal long before it happens. Hansen asked about the Netherlands, EWN. And it looks like VGK, just a little bit stronger. So what do I think? It's fine. Probably a pair of twos if you're playing poker. Nothing great, nothing bad. Okay, any other questions, comments, concerns, quibbles? So if you came late and didn't hear the open discussion about the stock market, Tiny will send the link out shortly. It's worth the 10 minutes it will take. Here's EWK. Yeah, I mean, it looks better than the Netherlands and better than Europe. But they're kind of all, I bet if I ran a correlation study, they're all really, really, really tightly correlated. So maybe this is a little better than the other stocks. Germany, surprisingly, is weak. That shouldn't be, but it is. Where's Greece? Nothing, not even moving. Let's see. Let's see. What's out there to worry about, Michael? Well, as you know, I'm not worried about Greece, for sure. I am, and I have been worried about China. I do think that, I did a really, well, I say it was really good. Maybe you guys think I stunk. But Yahoo has a new TV show. It's live streaming every day at noon. So I did it on Thursday. I don't know if they posted the link. I didn't see it yet. Let me see. Nope. God, I don't post up. So I did a TV show. I thought it was a lot of fun. It was live and it was fun. They asked the right questions, but I don't see. All right. So I don't see their story because I do think the lows in China will be taken out dramatically over the next 2 months. Whenever they stop manipulating the market, I think the lows in China are being taken out 10 to 25%. That's my biggest worry, Michael, is China. In Puerto Rico is a small worry. Greece, I don't care about. China is the big worry. Lee, what percent would you peel off if you sell some? I will probably look at least 25% of my remaining longs, if not 50%, when I start to peel off. China definitely did not save the Greek market. I don't think anything can save the Greek market. I think ultimately they're going to default on their obligations and they're going to leave the euro, which is what I've been saying for several years. If Germany is weak, will it pull us down? Depends how weak, because Europe's weaker than us to begin with. I think it's already accepted that Germany's weak. If Germany's economy collapsed, yeah, that would really hurt. But don't forget, Germany is a huge exporter, and with the dollar strengthening and the euro weakening, that's really bullish for Germany. Let's see. India and FXI I covered, which I said I still own some, and I'm going to, if we get any kind of rally, I'm going to sell more of my FXI holding, if not all of it. EPI is India, which I remember saying last week, it looks okay. And I like that it could break out a little bit. I'm just not hog wild about more stuff in the emerging market space yet. I think maybe later this year when we can cleanse the market a little better. Looks like it's all program trading in and outs. Yeah, Jan, I don't believe. I think there is program trading, but I would tend to take the other side of that argument that it's all programs. The internals are way too weak for it to be all programs. To me, it looks like there's distribution from a lot of quiet selling beneath the surface. So I don't think it's the progies. I think it's you got real portfolio managers selling. How to play Apple earnings, Bob? I don't really cover that. That's a little too specific for this call. What about South American countries? What about South American countries? I haven't looked at them in a while because they're not on my hit parade. Like here's Peru, which I used to own a couple of years ago. It looks crummy. To me, I guess I wouldn't run out and buy anything in the emerging market space right now. I think I'd have patience. I'd stick with the stuff that's working. I would not play laggards here. I think you gotta stick with the market leaders because the laggards are just not taking they're not taking any leadership. They're not coming up. So am I bullish on Apple? I'm not bullish on Apple. I'm not bearish on Apple. It looks like a lot of the stuff we've covered. Let's see. Have you ever commented on Harry Dent? Yeah, I think he's a complete quack. I remember in 1999 he wrote that book Dow 36,000 on based on demographics, and then markets went down 50%, and he came out with a book and said Dow like whatever it was 5,000 or 1,000. He's like in the same camp with Bob Prechter. So I have I pretty much either I ignore the Harry Dent nonsense or I would take the other side. It'd be really hard for me to hop on a Harry Dent bandwagon.
Yeah, he's the ultimate promoter. He's a big time promoter that just wants to make grandiose predictions to get attention, which is fine. I mean, but that's just really what he does. He calls for 36,000. The Dow comes nowhere near it. Now he's calling for Dow 2,000 or whatever the hell he's doing now. So whatever. God bless him. But
there's a lot. There's a lot of promoters. You know, I think the worst is Porter Stansberry. I mean, I think he's a complete quack. He shouldn't be allowed to do what he's doing because he just fabricates. I think it's sad and pathetic that that's not a regulated entity, but a lot of guys,
Well,
negative.
he got fined. He got fined $1 million for
It didn't matter. When you're pulling in 10 million, I'll give $1 million back.
well, because he said he got inside information from somebody, and when they went to the company and asked, they're like, I don't even know who the guy is. So
Negativity sells. You know, um, assuming a blow off top, would you all recommend similar to the short ETFs? I would. There's nothing I wouldn't recommend. Let's say that, but we'll put it in the Inner Circle newsletter at the appropriate time. I just right now we'll take tomorrow and Tuesday and see what happens. Bill Bonner says we are massive credit and too few dollars circulating, and too much credit. I don't know. All these guys, these Chicken Littles, they say it every year. So eventually something bad happens, and they say, "Oh, we told you about it." Well, the guys who called for recession in 04 and 05, and the recession came in 08. Great. So you were bearish on stocks for all those years when you could have made a lot of money and you finally got one right. I mean, to me, I think they're clowns because you can't. If you run a reputable business and you run money or you give calls out, your track record speaks for itself. You can't just sit back for years and years and be negative, 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 and finally the market goes down and you're like, oh yeah, I was right all along. It's nonsense. Let's see. I didn't see, again, my other laptop is frozen, so I didn't see any news on gold or silver. I don't know if it's a roll or there's actually something going on there. No, Kevin, I mean, Dennis Gartman, literally, you could listen to him at 9:30 in the morning and tell you that he's short the S&P and it's going down 30%, and by 4 o'clock he's like, oh, I'm long and I think we're going up 25%. I think he's another clown. My comments may seem, obnoxious or arrogant, but I'm telling you how I feel. I think people who make those ridiculous statements and then either they have nothing to back them up or there's no consequence to make them are clowns. And I think we're all foolish. I mean, I don't give them any money, but I know I have a bunch of clients who email me all the time when they read something on AOL Finance about, the dollar is being devalued at record levels, at record pace, blah, blah, and I tell them it's in 7 years the dollar's only gone up. So anybody who says the dollar is being devalued is a complete clown. They're a buffoon and they're liars. Dollar bottomed in March of 08. It's never been lower. So negativity sells. People love to tell you that our economy is in the precipice of recession and it's going to collapse. No, it's not. Or our markets, Dow's going down to 5,000. No, it's not. And this credit bubble is worse than the last one. That's a joke. The banks have more money now than they've ever had in the history of the Western world. Banks have never had more capital, $2.3 or $4 trillion in capital in the banks. So if your banking system is solid, I don't care what the average consumer does. If your banking system is solid, you're not going to have a collapsing economy. It's not going to happen. Do you have a target of 2,200? Not sure what you're asking. A target of what, 2,200? For S&P, looks like a double. Oh, for S&P, looks like a double top. I don't think I saw that. Yeah, I don't think this is, a double top or two apparent tops separated out by a period of time. This is not a double top here. I think you're talking about right here. And I would not call this a double top. Plus, it's much more difficult in the indices because they don't have the true volume. But this is not. Let's say it was double top. The measured move would only be 6%. So you'd be down toward 2,000. Not that big of a decline. And frankly, I think a decline just under these lows would be a beautiful one And I'm not calling for it yet, so don't start saying Paul Gallo bearish. But I think a decline down below 2,000 on the S&P would be healthy, welcome, and build up enough pessimism to get us to launch to probably 2,400. But that's a long-term story, and I don't even want to go there yet.
All right, we got to go. Thanks, everybody, for coming. We'll see you next week. Paul, you want to say
Yo.
bye?
Oh, goodbye. Good night. Have a good week.
Thanks, everybody.